And welcome back to the Financially Simple Experience. I have a question for you. Have you ever considered selling your business? Maybe after the year 2020. Man, what a year. We dealt with unforeseen regulations, unforeseen circumstances, stress. Maybe that has pushed you to the point that you say, you know what? I don't want to deal with it again. Maybe, just maybe, you're watching pending tax reform going, dude, I don't know if I want to work that hard to make the same amount of money. Maybe you're dealing with employee issues. In the news, as I record this particular episode, we're dealing with a pending national mandate. Yeah, the government is going to require, or appears, according to this mandate, is going to require business owners to verify the employees have been vaccinated. You can just imagine how that's going to go over. I saw one business owner says, great, I no longer have more than 100 employees. I now have 3 companies with all less than 100 employees. I'm not fighting this game. So you can just imagine how we, a clever lot, are going to deal with this particular development, let's call it. I call it an overreach of bureaucrats. I think our founding fathers fought a war over this type of nonsense, but hey, that's my opinion. Feel free to make it yours on this one. So the question is now the right time to sell your business? I read an article in the Wall Street Journal not too long ago that said mergers and acquisition has already blown past $2 trillion through the first 6 months of the year in a record-breaking fashion. M&A, mergers and acquisition, I'm going to call it M&A today several times, has experienced a record-breaking movement. But why? Why? Well, could it be that interest rates are very low? In other words, buyers have access to cash. There's a lot of cash out there. That could be the case. I mean, the government has printed, if you will, dollars. The SBA, Small Business Association, has dollars able to be lent for qualified businesses. Banks are still lending on M&A work. And there's a gray tsunami. I've spoken about this many times, that we have a generation that's ready to quit. They're tired of it. And 2020 probably didn't help them any. In fact, we work with about 3 clients that are in that area in terms of age that are in transition right now because they just don't want to fight the battle anymore. So right now we're seeing more cash. We're also seeing a potential tax hike. Right now, if you sell a business, you're going to pay 20% long-term capital gains. But there's a proposal that's going to move that 20% up to potentially 39.6%. Let's call it 40%. Going to double the capital gains rate. Now, of course, it's only those who have earned income in excess of $1 million. But for a business owner, in a year like 2021, you may have accelerated income, and you're going to try to sell your business in the next year, 2, 3, 4, 5, underneath a potential tax hike of double the tax bill. It could make a good reason to consider selling. There was a study done by the NFIB. It's called the Small Business Optimism Index, and it shows that at this point, the average selling price has increased up to 36%. It's the highest it's been since 1981. We've had 40 years since we've seen these numbers of potential businesses transacting. So I wanted to take some time and deal with what it's going to take for you to sell your business. Now, of course, I cover this in great detail in my first book, The Ultimate Sale. You feel free to pick it up. But as we deal with transition, if you're considering, hey, I'm thinking about selling my business, what's it going to take? Well, the first thing I'm going to tell you is you've got to do some tax planning. One area of tax planning that so many people overlook is this area of charitable intent. I was talking with a client who's selling their business for about, let's say, $1 million. And they said, whenever I sell it, I'm going to pay my taxes and I'm going to give 10% to the church. So $100,000 to the church. And I said, if we gave that $100,000 to a charity, a donor advised fund, or a private family foundation, or even a service organization, we're going to be able to net more dollars into your pocket than you selling the company completely, paying the taxes, and then giving the money to the charity. He's like, what? And so I showed him the math on giving 10% of the company before sale to an SO, a service organization, or a donor advised fund, or even a private family foundation, and how much more the charity would receive. Additionally, how much more money he had in his pocket. That's tax planning. Now, maybe you're not philanthropic in nature, but nonetheless, you still have some tax planning. More than likely, you're going to have recapture tax. More than likely, you're going to be dealing with ordinary income in the same year of which you sell your business. Obviously, you should have capital gains tax. So you're going to have some tax planning that needs to be done. And friends, you can't go into tax planning 2 days beforehand. In fact, once you have a signed LOI, letter of intent, with both the buyer and the seller are willing to sign the document, you now start to lose some of your tax planning strategies. We have a client that was a C corporation 3.5 years ago, and now they want to sell. And because they were a C corporation that converted to an S corporation and they're not past the 5-year or the 60-month statute, then we have some retained earnings issues that we're going to have to deal with. And so tax planning comes in often sooner than what you may imagine. This is why I often say you need to have a razor sharp tax planner. You need to be working with the tax planner and your CFP, your Certified Financial Planner. The tax planner is often looking at the current year and backwards. The CFP is looking at the current year and forward. And they work together many times in an amazing scenario. So tax planning is huge. You're going to have to do business legal planning, litigation possibly, but you're going to be dealing with business planning. So we're going to have a couple of attorneys come in and talk about, hey, here's some things you might want to consider if you're dealing with a sale or buying potentially. But you're nonetheless going to have to do some business planning. For example, you may have to deal with normalization. In these clients that are looking to sell or transition this year, we've been doing some normalization studies, either with brokers, advisors, or CPAs, and you would not imagine how taken back these business owners are when they start diving into the numbers of their business. Normalization. When we start looking at the number of expenses that business owners spend through their business, and as I mentioned many times, the amount of income assets that it's going to take to replace that income, or that income that they have buried within their business is oftentimes insurmountable. I'm working on a case right now to where the business owner has EBITDA, earnings before interest, taxes, depreciation, amortization, of, let's say, $1 million. But inside the company, there's an additional $300,000 of buried expenses that the business owner is used to. So now if we're looking and saying, hey, in order to replace your $1 million of income, we need X. Now we actually have to think about $1.3 million a year in income. Business owners don't think that way. This is why I harp on that area so much. So let's say you're considering selling the business. Here's a big question for you. Are you going to talk to your employees about the sale before it happens? Or do you walk in one day and say, hey, I no longer own the business? As I'm walking clients through this, I have several of them that say, we don't want to tell our employees anything. I want to walk in and hand them the keys and say, guys, I'm done. Others say, yes, I want my team to be fully involved in the process. Think about that. What does it look like? We also have this issue here. And I've seen it. I've dealt with this in my previous 3 businesses that I've sold. Whenever you're coming up to a date that you're looking to sell your company, oftentimes we have a tendency to put our business on cruise control. Just coast. Don't work so hard. Don't rock the boat too much. Well, what that's going to do is it's going to cause the multiple or the value to be impacted. What happens if the deal doesn't go through and now you've coasted, or you cut marketing back for 6 months before the sale? You didn't lean into the win like we're so used to doing as business owners. When it comes to selling a business, there's so much that goes into play. Now, I don't know about you, but I don't want to be average. Whenever the time comes for me to sell my business, I want best in class. I want to receive the highest value for my business that I could receive. So I want to lean into my intangible assets versus my tangible assets. We're going to talk about that in the upcoming episodes. Now, I've covered, again, all this information in my first book, The Ultimate Sale. Pick it up on Amazon. You can listen to it on Audible. But it does take some effort in order to transition a business. Have you considered what you're going to do after the transition? Because if you're going to get your check and walk away, the value is going to be different than if you're going to get your check and stay and help for 12 months, 18 months, 2 years, indefinitely. There's two different values there. We actually have clients that are selling and walking away. I've seen the valuation. I know the numbers, how it works. I saw the detriment to the final walkaway check, and they're like, hey, we don't care. We want our money, leave us alone. I also have clients that are like, I want to just stay and work and doing what I want to do. And their valuation was affected differently. I've seen some individuals on an offer where they sell the company, get a little bit of cash, and get some equity in a large organization that has a higher multiple and a greater trajectory and value than where their company was, called a roll-up. I've seen a little bit of everything this year. What I'm noticing, though, is that as I covered my second book, Your Baby's Ugly, I'm noticing that those companies who made intent investments into their intangible assets, they have more leeway, more latitude, more bite in negotiations than those who are run-of-the-mill average companies. So over the next few episodes, we're going to cover a lot of this, but I'm going to do it differently this time. Instead of me teaching like I did the first 300 episodes, and I've covered a lot of this in past episodes, I want you to hear it from professionals. I want you to hear it from professionals who deal with this at various aspects along the line. So we're going to have two different attorneys come on to the show. One is going to talk about the personal estate planning side of your life, what it's like for you if you're selling a business. How about this? What if your parents owned a business and you just inherited shares in an operating company? How do you deal with it? Especially as a business owner, if you own your own company. That has happened to a client of ours. What do you do? So we're going to have one attorney talking about personal estate and personal issues as it relates to being a business owner during transition. Another attorney is coming on to talk about the documentations, and they have one key point they want you to walk away with. And I think you're going to be amazed at how simple their advice is in terms of being a business owner. We have a business owner who, get this, walked through the business sale process all by themselves. They didn't have a broker. They did everything themselves. And I'm going to lean into them. I'm going to ask them questions. Now, we're not going to get into their personal life too much, but I wonder if they got the true value. We'll find out. We're going to have a business broker. Now, remember, business brokers often deal with companies who are under $10 million in revenue or about $3 million in EBITDA. So we're going to have a business broker walk through what they've seen in their career from the terms of a buyer and a seller. And we're going to have a M&A advisor, one who works for venture capital, come in and talk about the landscape and how business owners, we could dive into that world. As a planner, I have several clients. I mentioned 7 clients going through this process, 2 of which were able to attract VC money, venture capital money. And I got to tell you, the multiples are stupid. Like, if you're best in class, it's ridiculous. I saw somebody the other day, and they were talking about financial firms, and they were saying, hey, I'm interested in selling my company. What should I appraise it at? And instantly people go to the metric of 2 to 3 times recurring revenue. Now, in every industry, there's this standard answer that you get. Well, when I looked at that, I went, that's interesting. I wonder what the dialogue is going to be. So I just sat back and watched. And then someone chimed in. They said, that doesn't work in this environment. In this environment, you could get 7, 9, 12, 15x normalized EBITDA. Well, that makes a recurring revenue, instead of being 2, 3x, it could be 5, 6x or 7, 8X. So we're dealing with this very interesting time in our business world to where transition may make sense. So as we dive into this next few episodes, I hope you enjoy the guests that I've asked to come on to the episodes to talk through each of these points. Friends, I want you to succeed. I want you to rock it out. If you say, Justin, man, I've been thinking about transition. Hey, before you do anything, you better make sure you've worked on your value, because if you're average going into this world, you're going to get average. Yeah, you may get a little bit more than normal. Man, if you are a best-in-class company, like we have the honor and privilege of helping so many companies become and are becoming, if you're that, then dude, you can have the banana and the pudding together. I mean, come on, get you some vanilla wafers in that thing. That's what you can have at this particular point. You can have your cake and ice cream and sparkly candles. But you've got to prepare yourself. So I hope you enjoy these next few episodes as we talk through this idea of transition in the current environment. Friends, I realize life is hard. Maybe you've never thought about transitioning. It can be tough, but man, what an opportunity. And it can be frustrating. It doesn't have to be. Let's continue to make our lives at least financially simple. Hey, y'all go out and make it a great day.